traders, welcome to the TMT Stock Market Strategy video for Monday, February 8th. Well, markets took a turn for the worse on Friday after those non-farm payroll numbers that came out, and we really just got clobbered pretty much all day yesterday. And what I want to see is, where do we go from here? Well, it looks like I've been saying that I'm looking for that dead cat bounce. We did get it, but I mean, it was a dead cat bounce. It basically, there was no oomph to that, no market strength at all. Basically just an oversold bounce, and sellers came in, stepped right in, and really just knocked it out of the ballpark, back down again. So it looks like that we're going to challenge those August 24th lows in 2015. I'm going to show you the charts. Let's take a look at where we are here and see where we may be headed. Spiders Weekly, you can see clearly that this area here is going to need to hold, and that's that 200-week moving average, as well as the horizontal line of support here. Okay, now that's interesting, because if we lose that, we're probably going to get into that 166, 168-ish area. And again, if I want to see what Monday, Tuesday comes, we'll start putting some downside projections as well if it starts to get ugly again. Okay, now again, I like to see this market move a little bit higher in order for us to get short, but unfortunately, it's not giving us that right now. Spiders Daily, you see the support here at 187. That is holding true at the moment. You can see that here, and then 182.25. And remember, guys, you have this downtrend line. We're basically back above it, but this is where the projection more than likely is going to end up going lower here. Big down move. Whatever little move we had up is now diminished. We have this holding at 187. And again, we lose this. We held a couple times. You can see that here, last 3 times. When we lose that, then we're going to go to that 182.25. And then, of course, this low here of 181. That's going to ultimately be the line in the sand in the spiders. Now, weekly chart, as you know, we have a head and shoulders pattern that actually triggered. And what I'm looking for is, I'm looking for this bear flag to complete itself and actually start to break back down again. So we do have a bear flag pattern here. And this does not look good. You can see this is ugly, man. This is just a bad looking chart. 118 holds. If this does not hold, 108.50 is going to look like it's going to be the next round of support on a weekly chart. Let me show you that daily. And again, bear flags here are still upon us. And let's see what happens on Monday. We did get an ugly move, but you know what? I like the way the transports held up, believe it or not. You could see that daily chart really didn't break down as much. So that's actually not a bad sign, that at least there is some strength in the transportation sector. Okay, watch these thin zones. Like I said, as soon as we get below that 117.70, we're going to look for that spike low at 114.74, and then we need to reevaluate it. But again, guys, ugly looking chart here. I mean, I don't see really much happening here. This is just an ugly looking chart. Then you have the Russell 2000, which is the IWM ETF. 97.50 is going to need to hold, and then that August. January 23rd, sorry about that, is going to need to hold as well. But right now, you could see in the Russell, we have our bear flag pattern here that actually triggered. So we do have a bear flag that actually triggered in our secondary leader. And again, that is not a good sign that we are breaking down yet again. Can't even get back above the 20-day moving average. So 97.50 needs to hold, and then you're going to see that low here. But this has now triggered this bear flag in the Russell 2000 ETF, okay? Diamonds Daily, again, take a look. Let's just put that out there just to show you guys. We got a trigger as well in the Diamonds Daily. Bear flag did trigger. Now, if you don't know how to trade the bear flag here, what I like to do is I like to see one day, let me give you an example here. I like to see this break down like this, and then back test a little bit and make that lower high from this area, and then break down from here. That's actually an ideal way of trading a bear flag. Okay. Now, this might be a little too long in the tooth. Could be just a small uptrend channel and then a break lower. But yet again, I'm looking for that break lower for that 159.36. All right, in the diamonds. Take a look at the Qs. Lastly is the Qs. Support is 97. You can see here we had that downtrend line that broke back above it. And I tell you guys, tech looks horrible. Technology, the banks and financials, you can't get a good rally if two of the main sectors can't lead. And then you have the utilities. I'll show that chart to you in a moment. Right here, you have the utilities just screaming to the upside, and this is not a good sign. when you have a lot of the um, safe haven sectors, if you will, the REITs, healthcare, uh, consumer staples, utilities, they should not be rallying. And look what happened. You have an explosive move to the upside. The VIX is continually elevated here, which tells me that we are in for some trouble down the road. And I do think between the next 4 to 6 weeks, we should see some movement to the downside again. I would like to see, I mentioned before, a little move higher up than where we are now, and then look to try to get short the market. But it may not give it to us. I mean, this market may need to flush in order to start looking to get long. I am not looking to get long here, guys. I want to see a market flush first, and let all the weak hands get out. But you can see here clearly. You can see if I open this up, we had one little down day. Look what happened. Bam, right back up again. So there's a lot of fear out there. Not enough yet to call a bottom. Remember, VIX, VIX, you want to keep that area right around 38 to 40. If we do get that spike in that area, then I think that we may be onto something to have a tradable bottom. Hope it helps, guys. Have a great day. Be careful out there, and we'll see you tomorrow.